business. Elon Musk is one of the most successful businessmen in the world, and this is not just empty talk. After earning almost twice his former value in 2020, he is now one of the richest individuals in the world. While other companies have struggled to make ends meet, Tesla has recorded groundbreaking Q3 results, a result which shocked financial analysis and experts. But Musk is not stopping at Tesla. In a new information released in a Tesla Q3 2020 earnings call, one of Musk's businesses is bound to take the market by storm. Curious as to how this will be made possible? Stay with us until the end of this video so you don't miss out on any information. Let's get right to the action. In a Tesla Q3 2020 earnings call with Say, a technology company that aims to help shareholders be better informed about the activities of the companies they have invested in, the interviewer asked Elon Musk, "You've recently referred to Tesla as a conglomerate of startups. Other than manufacturing electric cars, what do you suppose will be the most valuable business units within Tesla over the next 5 to 7 years? Could you envision any of them ever spinning out from Tesla?" Unfortunately, or perhaps fortunately, Elon Musk did not refer to Tesla batteries as the next big thing. His answer bordered on Tesla insurance, and how he believes this could take a major chunk out of the auto business of Tesla. He said, "Obviously, insurance is substantial, so insurance could very well be, I don't know, 30 to 40% of the value of the car business, frankly. Now, insurance is a big business. In fact, the billionaire empire of Warren Buffett was built on the backbone of insurance. Perhaps Musk has seen how profitable this market is, hence his certainty. In the United States, the car insurance market is worth nearly $300 billion. And if Tesla should go into this market, they have a powerful edge over their competitors. Tesla already enjoys a sort of first position in the electric car market. Who do you think will be better suited to offer insurance options to electric car owners than the biggest electric car company in the world?" Now, here's how it works. The insurance market is all about risks, and the understanding of these risks is what makes insurance profitable. By understanding the amount of insurance premiums through information from public databases, it will be possible to know how much will be enough for a Tesla car insurance, for example, without the company losing money. In the business of insurance, there is an individual known as the actuary. The job of the actuary is to calculate risk, measure and manage this risk and uncertainty. Understanding this risk makes it easier to manage asset, liability, and even calculate valuation. With mathematics and statistical data, actuaries tell an insurance company how much they should charge customers for insurance policies, an amount that will favor the customers, while also making sure the company does not go bankrupt. But this is where Tesla manages to score an edge over other insurance companies. All actuaries will have the same body of information, usually a public database. However, since Tesla is an automotive firm with a massive technological background, they have a ton of data which is not available to other insurance companies. While other insurance companies have recently started giving their customers a special gadget to attach to their cars to determine their driving style, these companies are still not close enough to the amount of information that Tesla has. This device given to customers will be able to measure speed, braking acceleration, and consequently try to study how the customer drives. Tesla can easily get its customers' driving habits without having to attach any form of special gadget. Also, to assess risk properly, it is also necessary that you have a reliable body of data. Till date, no company has a database as reliable as that of Tesla. With this, no company will come close to Tesla as a competitor in the automotive insurance market. In a series of testings organized by NHTSA, it has been shown that Tesla makes the safest cars in the world at the moment. One of the most important features of Tesla electric cars is the autopilot and active driver assistance systems. This system comes with a bunch of other features, which include automatic lane changes, lane centering, semi-autonomous navigation, and an ability to summon the car from a parking lot or garage. However, in all of these, the driver still controls every single action, meaning he has total supervision at all times. However, Consumer Reports placed Tesla's autopilot in the second position, right after Cadillac's Super Cruise. However, it ranks first in the ease of use category. Importantly, this feature has helped prevent a number of accidents and will surely prevent more in the future. There is, however, a big catch. The bigger the fleet of Tesla becomes, the more complex this driving assistant role will become. But with this growth will come several improvements in the vehicle, which will of course reduce the number of accidents. Now, with a reduced risk of accidents, will arise a significant plus for the insurance company, lower premium payouts and bigger profit. Furthermore, as the insurance payout reduces drastically, it will become easier for Tesla to retain very competitive insurance rates, making it harder for their competitors to catch up with them. You should note that no insurance company will be able to access the data that Tesla has access to. This means that no insurance company or actuary will be able to accurately come up with an insurance policy for these cars the same way Tesla will be able to. If they are unable to properly analyze the risks, How then will these insurance companies know the right amount to charge these customers? Furthermore, because only Tesla will be able to do so, no company will be able to reach their competitive prices. But all this raises another question. Is Tesla's self-driving cars any safe? There's no denying that Tesla has revolutionized the automotive industry, and this, to a very strong extent, establishes Tesla as a master when it comes to fully self-driving cars. The company has also mentioned that any accidents that occur in a self-driving car will be the fault of the company, and they will take full responsibility for it. This already establishes an entirely new insurance market for the company, the insurance of self-driving cars. There is no doubt that no company will be willing to go into this market, and this is due to a substantial amount of data available to analyze risk. And the lack of data will mean one thing for insurance companies that join the market anyway, an extremely high insurance premium. We should also understand that at this point, because Tesla has a wide body of information, they will be offering at a lower price, and this will surely put them above the competition. At this point, we should also look at a few calculations and numbers. However, it should be noted that all these numbers are predictive based on the pricing of Tesla cars. For instance, a private Tesla owner should pay no more than $1,000 each year for a Tesla car insurance. This insurance policy also stands a good chance of being used if the car or vehicle is a part of the robo-taxi fleet. We could put the insurance premium for more expensive vehicles at around $5,000. That means if there are 1 million robo-taxi cars on the road, then Tesla will record an astounding revenue of $5 billion. This is highly theoretical, and a number of factors could affect it positively or negatively. But this is not a wild dream. Tesla has announced that they will build a massive fleet of vehicles and go on to unveil a car worth $25,000 in 3 years. If this is made possible, there is going to be a huge disruption in the industry, a disruption that will surely affect Tesla also. However, in 2030, experts believe there exists a very high chance that there will become more than 22.5 million Tesla vehicles on our roads. Well, let's take it from another angle. What if Tesla possesses a fleet of 100 million cars in 2030? This will mean that the insurance company will be able to record a shocking revenue of $250 billion, and this will be coming from just insurance. Now let's take a step back to the words of Elon Musk. He believes that Tesla insurance will take 30 to 40% of the car business. Just how much is 30%? Tesla is one of the most valuable car makers in the industry, and there's no doubt that its insurance business will yield great profit. In the list of most valuable auto insurance companies according to Value Penguin, State Farm comes first, with an estimate of $42 billion and 17% market share. Close behind is Geico with a worth of $33.1 billion and Progressive with a worth of $27.1 billion. Tesla's 30%, as suggested by Musk, covers on California. This is because the service is only available in California as of now. Of course, it will eventually roll out to other states in the US. Now, in July, the market value of Tesla exceeded that of almost every other company in the S&P 500. The market cap of the company sits at $391.95 billion. This suggests that if Tesla Insurance takes a market cap of 30% from Tesla's, the insurance company's market will be at an astounding $117.6 billion. In an instant, Tesla Insurance will knock off State Farm, who has a market cap of just $42 billion. And it is also important that we understand the importance of the feedback loop in Tesla's insurance business. The feedback loop makes it possible for Tesla to better estimate how much it would take to repair vehicles. In the long run, more consumers would be able to save money as regards to repairing, while also giving the company a chance to make a major improvement in their cars. In a conference call, Elon Musk explained, and as we've talked about before, with the much better feedback loop, instead of being statistical, it can be specific. And obviously, somebody does not have to choose our insurance. But I think a lot of people will. It's going to cost less and be better, so why wouldn't you? He also made mention of the loop earlier this year in a Q 2020 earnings call. This was actually very helpful for us to have a feedback loop to see what is driving insurance expense. A lot of it is just, it's like a little fender bender and the net fender bender, and because of the way the body collision repair is being done, costs like $15,000 or something, he said. And then we can actually adjust the design of the car and just how the repair is done to actually have the fundamental cost of solving the problem be less. So this has actually helped us under a whole bunch of silly things that we were doing basically without realizing it. But this is a problem in general with insurance. If insurance is like all you can eat, then the feedback loop for improvement is weak, he added. Again, Tesla has shown why they should be regarded as one of the strongest companies in the world. The Tesla insurance in years to come will surely be a strong competition for other insurance companies. Been a very crazy year. At first it was the fact that a third world war could have broken out due to the conflict between the US and Iran, And as soon as that blew over, the coronavirus took charge and forced nations to impose lockdown measures. Unfortunately, thousands of people died across the world, travel collapsed, and businesses and companies suffered real bad. While companies like Ignite and Nikola are wallowing in debt and loss, the exact opposite is happening with Tesla. In some brilliant twist of events, Tesla's managed to turn 2020 into an extremely profitable year in spite of the several global challenges. But this wouldn't be possible if Tesla didn't discover a brilliant cheat and exploit it completely. Curious about what that could be? Make sure you stay with us right until the end of this video to find out how Tesla cheats the system and why it is completely legal. Also, if you would like to support the channel, you can get 3 free stocks worth up to $1,600 from Webull at the link in the description. In 2020, Elon Musk made his money more like any other billionaire. In fact, in just 6 months, he recorded making over $48 billion, which was an increase of over 197% from his former net worth. But it's not just Musk who has been seeing a considerable profit this year. His company Tesla has also recorded quarterly profits that the whole world wants to know what their secret is. What is especially surprising is the fact that Tesla's managed to sell so many electric cars during this period. Even in China, where the company isn't really popular, there's been a growing followership, leading to more sales, of course. Just recently, the company released a report on the results of its third quarter, and it was as impressive as usual. The company surpassed what experts had predicted, and it further put Tesla as a major force in the automotive industry. Also, this edged the company closer to delivering 500,000 vehicles before the end of the year. They had already sold over 139,000 cars in the last 3 months to September, and they believe strongly that they will reach the 500,000 sales mark before the end of the year. This company said in a recent statement, while achieving this goal has been more difficult, delivering 500,000 vehicles in 2020 remains our target. Achieving this target depends primarily on quarter-over-quarter increases in Model Y and Shanghai production, as well as further improvements in logistics and delivery efficiency at higher volume levels. But the company has had to take some really drastic moves to achieve this. The Model 3 is one of the cheapest Tesla cars, and it was one of the most ordered cars in the third quarter. The Model Y also enjoyed massive sales across the world, but this quarter was not fair on the Model S and X, and this could be due to the prices. This year, the cars saw a 12% decline in demand from last year. To perhaps improve demand, Tesla had to cut the price of the Model S, which was one of the most expensive Tesla cars. It has also been slashed twice and currently sits at $69,420. Now, experts had believed that the total revenue of Tesla for the third quarter will be nothing more than $8.26 billion. However, the company went ahead to record an astounding revenue of $8.77 billion. Also, the adjusted earnings per share were estimated to be 54 cents, but at the end of the day, the company recorded earnings of 54 cents. Furthermore, the company reported a net income of $394 million against the predicted $331 million by experts. There's no doubt that Tesla is doing very well financially. But just as the company made more money, they spent an awful lot more money than last year. The company announced that their expenses had increased by 33% from last year. But this is not unexpected. The company is building new factories in Austin, Texas, Brandenburg, and in Berlin, in Germany. Now, regarding the new Chinese obsession with Tesla, Musk has announced that Tesla will speed up production in the Shanghai Gigafactory and improve on deliveries in a bid to meet the growing demand. While maintaining an international growth and establishing itself as one of the world's most innovative automotive companies, Tesla has also managed to see an improved sales growth in China, which has increased by over 13% in the last 6 months. While Tesla might not be a company that delivers cars according to regions, Dan Ives of Wedbush believes that there is a reason for the sudden increase in demand in China. He's of the opinion that the Chinese has suddenly caught the Tesla electric car virus because of the global demand the brand enjoys. Today, the demand for the Model 3 in China has skyrocketed, and there's no doubt that this will only get better in the next few months. Now, how exactly does Tesla do that? Before we get started, we have to understand the place of renewable energy credits and how it affects Tesla. Now, on October 3rd, CNBC reported with the recent deliveries of Tesla 3's Q3 vehicles, more renewable energy credits will be available to be sold to other automakers like Ford and General Motors. Here's how it works. Tesla has created a market where renewable energy credit is sold. Here's the catch. Other companies have to buy zero emissions compliance from Tesla. Or let's put it in the way that the experts put it. Other automotive companies have to pay their competitor to eat their own lunch. Tesla has a superpower, an ability to create electric cars without losing money. Investors are confused. Wall Street analysis and competitors are constantly looking for loopholes. But the thing is that due to the indispensable nature of renewable energy credits in making electric cars, it is continually going to be its source of income for Tesla. And it will only rack in more as the years go by. While some might think it of a dubious act on the side of Tesla, This is not in any way correct. Tesla's dominated the zero-emission vehicle credit trading market, and it has sold more credits than any other company in the business. One of the reasons why is simple. Tesla started out as a company that manufactures electric vehicles. This immediately gave them an edge in the credit trading market. It also meant that trading car companies had to pay Tesla for these credits to quicken their transition to fuel cell electric zero-emission vehicles. While most automaker companies might find it quite hard to consistently pay Tesla for these credits, as it might seem like giving them a powerful edge since they are competitors, Fiat Chrysler has signed a deal with Tesla to buy credits in the European market. Simon Mui is the Deputy Director of the Clean Vehicles and Fuels Group at the Natural Resources Defense Council. He explains automakers are scrabbling to catch up, and they see Tesla, like any other automaker, who can produce more EV credits than they require, can monetize the credits. They've done it from the beginning, and it's going to be a big element in terms of providing a strong tailwind. None of these companies want to pay Tesla. Of course, you wouldn't want to if you were in their shoes. Also, the renewable energy market is growing on the daily. In the second quarter of 2020, the revenue Tesla got from these credits was estimated to be around $428 million. However, this was the largest Tesla had gotten in a long time. Garrett Nelson, a senior equity analyst at CFRA Research, believes that it's probably the biggest source of their earnings, beat over the last 4 quarters, and a line item that is so unpredictable. This has also led experts to argue of the legitimacy of it all. Experts have repeatedly claimed that the sales of these credits lacked any transparency. Wall Street analysts have also said that their inability to understand the workings of the energy credit trading at Tesla has made it impossible to adequately estimate how the company will perform each quarter. As you might remember earlier in the video, Tesla beat all the estimations of experts. Garrett Nelson said, and I quote, "The market is not transparent. Like an equity market or bond market, that makes it harder to model, difficult to model, and as an analyst, you know that probably will be the biggest swing factor for every quarter in terms of whether they meet or miss their estimates. And that's why we've had this wide range of massive earnings beat over the last 4 quarters. That line item has been larger than anyone expected. But despite the lack of transparency, is this form of cheating? Spoiler, it's not. In an attempt to try and shed more light in the zero-emission vehicle credits, the Resources for the Future and other similar organizations have begun investigating into the trading actions of Tesla and their revenue per credit in the last few years. In spite of the various stories thrown around by critics and analysts, Tesla has refused to make comments on the subject. However, at the end of the day, Tesla has not made the sales of credits into their primary source of income. Garrett Nelson believes that the company is hoping to widen the competitive gap between themselves and its competitors. And he says that the company will achieve this by lowering their battery costs, which of course will buy them enough time to come up with the more competitive strategies. Tesla's CFO, Zachary Kirkhorn, has said that the revenue from the credits are not focused on. In 2019, the company had a relatively good revenue from the credit market. In 2020, it doubled. In spite of this, the company still does not make assumptions that it will become a major income source for them in the future, or even presently. Of course, it will still be a bit difficult for analysis to measure the revenue Tesla gets from these credits. Nonetheless, it will still be easy to measure the success of Tesla in relation to other automakers. Tesla has also been doing extremely well in the past 3 quarters of 2020. How will the company perform in the last quarter? This is taking into consideration the recent victory of Joe Biden as the president of the US, which will of course have an effect on the climate finance. But there is still more than enough proof that Tesla will do better in the last quarter. Will they finally deliver 500,000 cars at the end of this year? We can only wait and see. Furthermore, we also hope that the coronavirus pandemic would have completely blown over by 2021. Perhaps more people will be equipped to buy Tesla cars. Space companies in the world, and they have some of the wildest dreams ever heard of. SpaceX has promised to have the first manned flight to Mars and also organized the first interplanetary travel known to man. SpaceX also has set the record in the space industry, such as being the first privately funded company to send a liquid propellant rocket to reach orbit in 2008. In 2020, the company has done even more, such as the announcement of Starship, which will be an even more advanced aircraft for space travel. Now, what most people don't know is that SpaceX is a privately held company, even though they have been around for 18 years. In spite of this, SpaceX has been consistently ranked in profit year after year. This causes experts to put their annual revenue projections at $2 to $3 billion. Even though this will still grow in the next few years, and could even grow to be bigger if the company is made public, Elon Musk has refused to take the company public. Why is this so? Make sure you stay with us until the end of the video to find out why. Also, if you'd like to support the channel, you can get 3 free stocks worth up to $1,600 with Webull at the link in the description. So, what does it actually mean for a company to go public? Going public means that a private company has decided to make a public offering, meaning that their shares will be publicly traded and publicly owned. This is usually done to help a company raise capital and also help them expand. When a company does this, they are now bound by regulatory constraints, management restrictions, and so on. Now that we understand that, the reason for not going public could range from any of the aforementioned regulations, considering the industry SpaceX currently occupies. One of the most common reasons why most companies don't go public is volatility. And this especially affects companies with state-of-the-art technology, companies whose services aren't completely for everybody, and this is true for SpaceX because the company is a space company which makes use of revolutionary technology to achieve their goals. When companies are using state-of-the-art technology, they are more prone to market fluctuations. Why is this so? Investors have a habit of putting all their money into AI and space companies when the market is going extremely well. However, when the company hits a ditch, these investors immediately take their money out of these companies. If this consistently goes on, the stocks of SpaceX will plunge in reaction to the status of the market. Investors are not especially concerned with the technology of these companies, they're concerned about the financial repercussions and what that will mean for them, whether loss or profit. Let's take a common example. If the S&P 500 stocks suffer a drop from 3%, there will be a corresponding drop in the stock of SpaceX, and this may be up to 15% or higher. If this happens consistently, it'll become a nightmare for the company to raise funds, and even investors might not see this as a viable investment option. Furthermore, SpaceX is a company with long-term goals. The goal is to go from Mars, and that isn't happening tomorrow, but in years to come. Investors, on the other hand, will want to make short-term gains, which is a direct contradiction to what SpaceX offers. This could also directly affect the behavior of SpaceX shares in the stock market. Starlink is a project of SpaceX, which could be completed and ready for use in the next few years. This is the sort of project investors will be interested in, and this could also make them hold SpaceX for a couple more years. This way, they can make more profit when Starlink hits the market. But Starlink is just one of many SpaceX projects, and it is one of the few ones with a short-term completion period. Now, another reason why SpaceX has not gone public is that going public will mean that they have to focus on their quarterly revenue. As you already know, companies that are publicly held have to release results every quarter to gain the confidence of investors. SpaceX, being a long-term company, will of course not be able to cope with this. A large percentage of what the company does is in an unproven market. How then do they hope to release quarterly results 4 times each year? But going public will give the company more money to pump into their revolutionary projects, right? Well, not quite. Going public does not exactly guarantee that because SpaceX is already valued very high in the private venture capitalist market. According to CNN Business in August 2020, SpaceX has a current value of $46 billion. If this figure is correct, that means that the company has a value of almost 20 times their annual revenue. To give you a better idea of the worth of the company, think of it this way. If Tesla was valued the same way as SpaceX is being valued, Tesla will be worth an astounding $500 billion. That's more than $100 billion added to their current market valuation. With this sort of valuation at SpaceX, it is very important to think like Elon. Will the public increase this valuation? Will the public market bring in enough investment? But the other questions will be, what will be the price for this transition? Rather than suffer in the hands of the public, Elon Musk has adamantly chosen that Tesla remains private. But there's more. Another important reason to not go public is because they don't actually need the money. Yes, you heard that right. SpaceX is the company whose bottle cap to growth is not based on capital, but rather on their technological advancement. Elon Musk, in a mail to SpaceX management, emphasized that Tesla and SolarCity went public because they had no choice. These two companies were struggling, and Tesla needed to raise a lot of equity capital. SolarCity, on the other hand, had to settle debts. But since the primary goal of SpaceX is to establish life on Mars, Musk believes it is paramount that the company does not go public until they achieve this. Also, SpaceX is not recording the same expense Tesla recorded. While making rockets is quite expensive, it is more expensive to make millions of electric cars. In essence, SpaceX, rather than individuals, have corporations as investors. Some of them include NASA, Google, and the Bank of America. These corporations, who on their own are worth billions of dollars, can wait as long as necessary to cash out on their investment with SpaceX. But what if all those investors suddenly decided to leave? Does this mean SpaceX will crumble? Fortunately, no. While the pandemic gripped economy activities around the world, Elon Musk made money, more money than any other billionaire in the world. Today, Elon Musk is worth over $100 billion and is the 3rd richest person in the world. This means that in the case of a lack of investors, Elon Musk is rich enough to financially float the company by himself. But we should understand that the majority of these funds are tied in stock, and he would still be able to fund SpaceX with $5 billion each year for the next decade. We, however, believe that it won't get that bad. Right now, the least thing to worry about at SpaceX is money. This brings us to the next big question. Will SpaceX one day go public? Of course, as Elon Musk has already mentioned, it is inevitable. As earlier mentioned, the company is very close to the $50 billion valuation mark, and they are way past the prospect of an acquisition. However, with an increasing valuation, will arise a need to relate cash and make a higher profit, and there is only one way to do this: going public. While Elon Musk might not be seeing SpaceX as a venture meant for profit, we cannot say the same for other investors. For all we know, these investors may already be pushing for the company to go public. Let's get this straight. Elon Musk is not afraid of going public. In fact, he very much believes that this is something absolutely necessary. However, his fear is that going public before the Mars transport system is completed will only derail its completion. Of course, if the company goes public when the transport system has been completed, there will be no issue finding investors because Mars will no longer be a far-off dream, but a reality, and investors can only cash out from what already works. When will we see this happen? Since the transport system has been reported to be unveiled in 2024, we could see the company go public in the next 10 to 15 years. But in spite of the fact that SpaceX is not public, there are ways you can invest in them. The best way to do this is to invest in the investors of SpaceX. That would include Google, Bank of America, Alphabet, and Fidelity, who jointly invested $1 billion into SpaceX for a 10% ownership of the company. Another method is to buy exchange-traded funds that include SpaceX. ETFs, as they're commonly called, is a type of investment fund that is sold throughout each day on stock exchanges. It bears a huge resemblance to mutual funds and usually contains both public and private companies. All you have to do is find which company has a stake in SpaceX and invest in it. ETFs allow you to generally invest in the entire industry. That is, you are collectively investing in companies like SpaceX, such as Blue Origin. But if you want a direct way to invest in SpaceX, then you would have to go through the Forge Global or EquityZen. The duty of these companies is to give retail investors an opportunity to directly invest with the private company like SpaceX. How does that work? These companies go on investigative journeys to find an insider or venture capitalist who already has a stake in SpaceX. They will then convince these individuals to sell a certain part of their stake for an agreed upon amount. This way, you as a retail investor can have your money directly in SpaceX. But as you already know, this will be going for a price higher than usual, or even a ridiculously high price. There are also several minimum requirements set by different private companies. With all that said, SpaceX is not going public anytime soon, and you already know why. But before that time comes, you can jump in on the mentioned investment opportunities so you can grab a piece of the cake before it goes public. You can also take out time to research on a number of other ways you can tap into the private market. Good luck, and thank you for watching another one of our videos. While you're here, go ahead and click on one of these two videos on your screen. See you there!